Hey guys, good morning. Happy Monday, everyone. So today, we're gonna talk a little bit about some financial education, some concepts, and specifically, we're gonna cover taxation. So high level, there's three ways that Americans pay taxes today. There's something called a tax now. This is with respect to income, with respect to growth, with respect to investment growth, etc. Right? So there's something called tax now, tax deferred, and tax advantaged. The tax now is basically any mutual funds that you might invest your money in during the year. If you put in your money in some mutual funds, you make some money on it during the year. At the end of the year, you have to pay taxes on it. Same way with like checking accounts, savings account, with some bonds. If you put your money in, again, for example, if your bank pays you about about 1%, and then let's say you have $100 in your savings account, you made $1 on that. At the end of the year, the bank will send you a 1099, which means basically that there was a growth, there was additional income you made on your money, and now you have to pay taxes on it. So that's a tax now. Something called tax deferred. And most of you will recognize is like a 401k, for example. 401k, 403b, or 457, those are all the same thing. The mechanics works the same way. They're just different tax codes based on if you're a teacher, or if you're a police officer, or if you work for a corporation or any company that offers something called a 401k, which I know that most of you are familiar with. Then also an IRA, which is an individual retirement account, or a SEP IRAs, which is a self-employed retirement account. So for all of these accounts, it's called tax deferred because you get to put your money in before taxes. You get to grow it, but you don't have to pay taxes on it upfront or during, except until distribution. Also, there is some eligibility requirements as well as distribution requirements, such as you cannot touch this money until you're 59 and a half. Why? Because these are intended for retirement accounts. But you're gonna pay taxes on it later, which means, or deferred, which means at distribution, when you take your money out, then you will have to pay taxes on it. And then the final one, which is called tax advantage, and as you see, there's only two ways right now that the government allows Americans to grow your money for retirement or to build wealth for later. It's something called tax advantage. And there is one item or one product called a Roth IRA, ROTH IRA. IRA still stands for individual retirement account, and or something called cash value life insurance. Again, these two items also have different eligibility requirements, and we will go through them at a later time when I specifically will talk about the IRAs, different types of IRAs, we will cover life insurance as well. But right now, what I just wanted to bring to you guys, to your attention, is that there's something called tax advantage. Roth IRA and cash value life insurance, basically what happens here, you're going to fund these products with after tax dollars, meaning it's like a savings account. So whatever money you have left after your 401k, you want to put, you can save money in these products. However, you never have to pay taxes on it again. So this is again the main thing here to remember: pre-tax dollars, after tax dollars. The pre-tax dollars, you're going to continue, you're going to have to pay taxes on not only what you put in, but also the growth as well. After tax dollars, you never have to pay taxes on it again, neither obviously on the contribution, because that you already paid your taxes, but certainly not on the growth. Now, there's also going to be some withdrawal and distribution requirements. For example, you can touch the contribution, you cannot touch the growth. However, again, at a later date, I will cover those things more in depth. What's a 401k, what's a Roth IRA, what are some of these other products. But right now, just to summarize and to wrap this up, you guys, there's three ways you're going to pay probably taxes on growth or on your money as you grow your money for specifically for retirement in this case. Tax now, something in a checking account. Tax deferred, something like a 401k or an individual IRA retirement account, and tax advantage, something that you fund with after tax dollars, and then you never have to pay taxes again. So hope that helps you guys. Something definitely to keep in mind as you figure out how am I going to build wealth, how am I going to save my money, where am I going to invest my money, and more importantly, how is taxation going to affect when I'm ready for distribution. So I hope that helped you guys. If you have any questions, please let me know. If you like this video, please click like or comment below. It's going to be again on all of my social media platforms. And have a fantastic week, everybody. Thanks.